Best people, you are with the Market Sniper. That's right. Yes, updating you again on the gold area, the silver area, the gold-silver ratio area. We'll be discussing all three of these things as other nation states such as Brazil and China start to interact and do bilateral trade in their own currencies, including the yuan, I would imagine the Brazilian real, and of course the dollar is excluded from that. As these events are unfolding, we are watching the slow motion de-dollarization of the world, and we are seeing the indebtedness and the holy trinity, the unholy trinity of debt, currency that is borrowed into existence by debt, and the banks, the intermediation mechanism for the previous aforementioned, the unholy trinity of dollar-derived debt exploding, and it's going to be a global event. And that which you hold will be that which you own. The digitization that we've warned so much about can very much work against you. Physically held gold and precious metals have served you well. Let's go to the charts and see why we are bothering to do this update. I am on the hourly gold. Take it away. Up we go. The hourly gold chart. So we said to you on this here channel, and I don't know many other YouTube channels that come out and say, hey, guys, here is the Market Sniper, and he's offering you a 1:40, a 1:50, and in certain extreme instances, a 1:100 plus, depending when you get in and how you manage your money management and how many times you're prepared to enter. So let's deal with it. This video was one of two that we gave you, that there were real tight risk, highly expensive reward trades available. You would have to try hard not to get a 1:40 on a combination of two patterns for a trade that you're going to have to hold for some time, because the target is right the way up to the doorstep of the 3,000 mark, 2,905, which is likely to be overshot to some degree. That is what we explained in these previous videos. In fact, there wasn't one, as I've mentioned, there was two. There you go. Insane. And if you'd got in really early and understood, you might have even maxed out that 100 RRR. So let's go to this chart and let's have a look first at that small time frame setup. Was this the triggering event? Yes, sir, it was. For us, by HVF method standards, most certainly was. This is the futures, so I want to highlight, people get confused sometimes, particularly when you're on the near term, the futures after an expiry. The delivery futures actually has hit 2040. However, if you are trading something where you're just getting gold, dollar, and you're getting a spot market, you will find 220. So you've got 2040 was hit, now trading 2037, and here you've got 2025 was hit, now trading 2022. So it depends on your individual market. So the futures are not necessarily what you'll be trading. So let's take the lower of the two. That was the gift event that we warned you may come. We also warned you of a rising wedge and said there is likely to be a final dip that will bring you the opportunity to pick it up cheaper. It actually dipped pretty deep. If you had left your stop there, you were fine. It dipped pretty deep, and you got a proper little final flush out of the weak hands before it literally reversed higher than it was before. Classic flush out of weak hands, over leveraged hands, not in the case, and the upside HVF then broke. This was a triggering event the minute you cleared that RH3. What does it do? If you chased in, you straight away get a little bit of a pullback as well. But overnight, there you go, there she blows. This has nothing to do with OPEC's cut in oil that happened 2 days ago now, the Sunday, the weekend, and everybody reacting on it Monday, which was yesterday. This is new drivers, new drivers. Yep. Now, I'm saying to you, you would probably not get back there. So if you manage to get a just-in-time entry over here, or like our community, first link in the description below, click simple diary, choose your date, choose your time, book a call, have a chat, friendly, no obligation, real trader, non-salesperson, community member for multiple years who understands HVF method and who will answer your questions as to whether it was a good investment for him. But anyway, while you're pondering doing that, real move, real explosive move. This is a triggering event, my friends. If you put volume on charts, this will normally confirm. You go for your indicators and you will see it normally confirming. See it there, bang, there's some big volume. You haven't had volume like that since you made that up leg. But the most important thing that's going to give you the longevity to this trade, you've now blasted away from your stop loss. In fact, for me, I would consider a stop loss even here as relatively safe. I don't see the undoing of this. However, you would have normally on the HVF method your initial stop over there, and you would have had it during this period down there after it was made. And before you knew that low where it was in, it would have been over there. Remember, you need to understand multiple entries, you need to understand money management, and you need to understand position sizing, and you need to make sure you aren't too aggressive and coming up too far, and trailing it for break even and all of this nonsense. You're on risk. Trading is a risk-based game. Write the check for a known amount. That is your position sizing. If you have multiple entries, the sum of all the checks is your known amount of loss, and it should be. Not as I saw in crypto, damn, somebody crashed Bitcoin, Kobe crashed Bitcoin and now I've lost 100 grand. And then when everybody said, oh, you got wrecked, he said, no, I use stop losses. If you lost 100 grand and that's big enough for you to cry about, you clearly are not on a 3 or 5% stop loss, and you're not trading a 2 or 3.5 million pot, for which 100 grand is not so destroying an amount. This is clear signs of people that don't get money management. And we're not crypto kiddies. We are here to build wealth during reset season. You must know the loss. So money management is critical. This is a key triggering event. This has broken. But the big picture, which is the longevity of the upside move, is far more important in this. And I'm going to show you that as well. So we're going to unhit the eye there and just show you. See the fat red line? That has got a mild descent on it. That is the capping descending grind line of that macro bull flag that we illustrated to you. And that is a 44. If you were down right here on the lower time frames, in my opinion, now you're almost safe over there at around a 75. But I don't want to be hindsight intelligent. This is motoring its way. Where does this initial move? I see a 2043. For the cash spot markets, that's going to be higher for the future markets. So know which one you're trading. If you don't have a futures account and you aren't actively selecting futures in your trade platform, you are on this spot market, which is the 2024. So this runs 2043. And unless we get a real shock very soon, it's likely to inch its way up and away. So what was the big time frame setup pattern that is so important in all of this? Here it is, my friends. Here it is. That is the bull pole of the bull flag that we elected to choose. I felt that that's probably a little bit slopey. That would only add further upside joy if it was actually that low over there. We elected to go for the point where the market moved very, very strongly in our favor. That itself was an HVF that we called along during the period that we were expecting oil to collapse. Yes, and we've said some things about energies again. They moved up on the production cuts, but I would be concerned about demand destroying events. There is a difference between monetary substitutes such as gold, silver, that are physical, that central banks are buying, and the likes of commodities in a demand collapsing world. But long run, we expect commodities to go back up. We expect hyperstagflation, but we do expect initially some weakness. Anyway, so that was the upside HVF of the oil to single digits call that saw it have a minor shake of the head. So that was the demand destroying event. That's what it did to gold as part of its journey up to there. Not too deadly, as you can imagine. During that period, oil hit zero. Now we're in a almost similar situation, only this time Russia and the Arabs have agreed to price cuts. So let's pull this through. Here you go. This was your triggering event. Note the multiple of times. I'm actually going to drop this one even into 3 days. So this is kind of 60% of a week. chart to highlight the number of times that this level was validated. That was the founding high. That was your last high, 2075. Then you failed to make a new high there. You fizzled. You fizzled on a secondary attempt that was quite weak. You came up quite recently here and you had a pullback down. Again, a flush out before the macro upside. Then you broke this with momentum. It's a bit difficult to see. There's lots of draw levels. I'll take the eye off for a second. You broke it with momentum, top, and now you run. And this is real momentum, friends. In fact, it's an important thing. Let's take some of those draws. Let's stretch this out. This continuation pattern. Let's stretch this out. Take it off, and wipe our face. Pop. You have not actually had very many 3 days, so we're on the 3-day time frame. That is 60% of a week, call it a fat half. You have not had many events where you have closed on the 3-day chart above this level. You have a close here at that level, you have a close there at that level. That's 2 days. Everything else is below. Everything else is below, my friends, where you are trading right now. You have only 2 other events on single 3-day events. And one of them was a shooting star on the way heading back down. That is literally hanging on by the skin of its teeth. On the 3-day chart, which is 60% of a week, we are looking at the fact that you have only 2 other candle close higher than this, and they're not very far away. This target that takes you to 2070s, did I say? Depends whether we're on the cash market. We'll go and have a look and confirm that again. You are about to run these highs, in my view, and you will make intraday technical highs higher than all of this. This is the beginning of the capping, descending grind line break, only defined for you by HVF method, that you will watch implemented by me and other students like you that have learned this process and are trading the markets to build wealth during reset season. Everybody has a feeling that gold is going to do well in dollar reset times, but so few people know how to trade it. Everybody has a feeling. Many people taking on Brent Johnson on his dollar milkshake theory during this period of dollar weakness, but he says it can go to 80 and it can still hold the dollar milkshake. It can go to 160 and still hold. It's not tradable. Something that can still be right down at 80 and 160 without the technical timing instrument. And we were aligned during the dollar bull period, and there may well come in time another, or there may not. We don't know, but we will see it in the charts. It's when you get the timing right and you can squeeze your risk that the real gains start to come your way. Not only in investments, pure gold link below. Get silver coins, silver bullion, bullion coins, gold bullion coins, gold bars, all delivered to you. Good service. Weather call, that link below. Use Bullion Vault. If you're just starting and you've got a small amount of money, start investing first. Don't start trading. You've got to earn the right to leverage. Put $100 a month in a Bullion Vault and accumulate capture this move. Cash it in and buy gold with the profits. Then you're building a foundation, an investment foundation that will still go up with you when you make mistakes, when you're at learning your game on leverage, which you will learn small if you're with us, and also be put in many very powerful trades where in fact some people will be looking at triple-digit R's, risk-reward ratios, on trading this. Okay, SimpleFX, by the way, you can pledge crypto, you can pledge USDT, you can also trade gold long there. You can utilize Scandinavian Capital Markets, great leverage, Sweden-based, but outside of the European restriction on leverage. That means you get more than 5x. You can get 20x, you can get up to 100x per instrument subject to. So that's all in the links below. This move is great. And why? Because we assess it's going to go a long, long way. So let's go back and cover the long, long way part. How long is that piece of string, you may ask? Well, overall, it's our assessment that you're going to be knocking on the door of 3,000. That doesn't mean that's the end of the bull market. It means for the technical structure that was set up, that is going to be a typical response. So again, if we put it on there for you, that would be the low that we would select, and that would be your pole. And we project that to the upside. And this is a trade that's not going to give you everything in one day. This was a 13-month hold. That's over a year. There are carry costs to that. If you don't want carry costs, just invest. A little bit of leverage. If you're making enough money, the carry costs are covered. The carry costs are covered. You don't not make profits in your business because you have to pay tax. You don't not take the potential of a very long-term macro trade because you might have to pay some borrowing costs. And the lower the leverage, the lower obviously those costs are. And a 50% move in metals from these lows is a very, very powerful move. There you go, 2,904. What of silver, you ask? What of silver? Back above the $25 mark. Yes, so let's cover the great unloved. Still behind schedule, but catching up fast. We've done lots of work on the gold-silver ratio. We will do that next, but look at what's happening on silver. So you had this reversal over here, the left shoulder, the head, the right shoulder. We'll drop a time frame so you can see that a little easier, but this was the dip during the events of you-know-what, March 2020. That was a more volatile dip for silver. It made its subsequent reversal targets there. It's got a continuation pattern that is there, and it is now ripping. This is the line we want to see fall, and it is now ripping with momentum towards it. I fatten it up for you so you can see it. That is the line we want to see fall, and it is absolutely ripping it. It did this reversal, kissed that target only just, and then slipped to the downside along with a number of other things, revisited the neckline, and now we have a bit of a ripper. So for the weekly charts, you have 4 consecutive weeks up, and these are very powerful little candles, these last two, because they are look one way, go the other way candles. Let's just bring these into view a little better. Let's get you a proper view of those candles over there. Why do I say they're so awesome? Look one way, go the other way candles. That. So the silver was tested down to the 23. Tested, support has come back up, is ready to buy, bought back up to the open and smashed higher by an order of magnitude, at least the same, maybe a bit more. Again, open, tested. Is there support down there coming? You betcha the support has come straight the way up to there, smashed back up by a similar order of magnitude. So these have long downside wicks with commensurate long bodies to the upside, closing at or near that high. Look one way, go the other way with momentum candles. You've just had 2 back to back. I've told the guys on the monthly chart you've had the same on Bitcoin, and it's an amazing candle. These on the weekly time frames, you've had 2 beautiful weekly breaks, and you've smashed that target now properly after just kissing it. And I would say it's just a matter of a time before you are running through the capping descending grind line somewhere in that second pink box that I've drawn. So silver is a runner, and you are back through the psychological $25 mark. The psychological $25 mark. Oh yes, sirree. That is amazing, absolutely amazing, and we're excited to see what comes out of that. If gold goes up 50%, what might silver do? Well, for that, we turn to the gold-silver ratio. So let's get into the gold-silver ratio. You have seen these triggered. We highlighted to you that gold is likely to make new highs, including against the euros. It made great highs in 7th of March. Don't forget the euro at that point was 0.95 to the dollar. It's now 1.09 to the dollar, yet gold is close to making a new high. So the euro in the fiat game is benefiting from the dollar weakness, and even still you're likely to see that high break. You've had an even more recent high on the pound. That was literally March the 20th. You have literally 2 weeks away from a high and you're back leaning upwards again. We highlighted this ascending triangle structure and what a critical level the 1575 was for our Brits. Yes, there you go, there you go, there you go, there you go. Repeated resistance, then smashed, turns into support, up, 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 and away. Bye-bye 1575. Look at the steepness of this grind line coming up under this. There's not many people that wanted to sell. People are coming up under gold. This is big money. Up under gold, up under gold. Fiat is rubbish. All fiat is rubbish. People are trading their fiats, their rubbish is out for gold. That's what's happening, friends. Look at the gold JPY. Yes, have a look at it. Oops, we've smashed that JPY target as well on a smaller upside HVF target. That is also awesome. Look at it over there. Bang, smashed. More HVFs hitting targets. Lots of feign and break and churn, and then she got going. Oh boy, oh boy. And this all formed after the last target that came out of a bigger structure down here. This is how you staircase your wealth. Building with leverage, moderate leverage with real stops, takeoff points where there's likely to be rest, converting increased amounts into investment precious metals, building your foundation layer to your pyramid, stuffed with low or unleveraged, owned physical gold and silver that you have in your own grubby mitts. That, ladies and gentlemen, is wealth in reset season when the fiats are being destroyed. Look at it across country, I say. Look at the gold Australian dollar. We highlighted this fella. Up, 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 ready to make a new high on a previous high not 2 weeks ago. Again, the 2.8, such a critical level. We saw all the bull signs there. Again, an ascending structure against a fiat. Look at that. Smash him he did with momentum. Bang, bang, bang. That's your break on the 2,800 line. And you're up, up and away, and you're looking for new highs. That is it. Against every major currency, you will probably be back to make highs against the CAD shortly. 2 weeks ago, back up. You'll be looking, oh, precious rand, bless the rand. Oh dear, oh me. Once a great gold miner nation, look at this, 2 weeks away from making a new high, including the Chinese currency. But, replace the dollar. Well, not quite, not everything going to be like that. Gold first. What are they buying? They're buying gold. They are dumping their US treasuries. That you know for sure. And who has to gobble them up? Nobody else wants them. That means the Fed, the buyer of last resorts, the self-consumption of it all. That's right. You are not far away from the world's trading nation, the largest manufacturer of all goods that you're likely to be the consumer of, surrendering to a new high on gold as well. 13,908, previous high 14.4. By the way, you've only had one other week close higher. That close of the second candle is down here. You are in the second highest current weekly close right now against the Chinese yuan. Then that stalwart, that gilt, that golden fringed currency of great note, the Swiss franc, the home of the elite bankers. Oh dear, well, you're finding that is also about to get into new highs territory. Look at that stretchy candle that occurred there. Not doing so great either. That's it. So we also know about the emerging markets. It's absolutely ripping. The Turks know about gold. The Indians sure know about gold as they watch these developments occur. So let's get straight to the gold and silver ratio. So what did we say repeatedly? We said first there might be a head and shoulders. Then we said it got too high. It's going to be a broadening structure that may turn on the splitter. So we adapt as the data adapted for us. We said this is a big rejection coming up. There was a shooting star. It's no longer a shooting star. It's a full-on engulfing, and it is spilling to the downside. This is gold and silver. How many silver ounces you need to secure a gold ounce? That is a violent rejection from the high. That high over there was 91.87. You're talking 92 ounces of silver to get you that 1 ounce of gold. Insanity. They only pull it out at around 7 or 8 ounces for when they're digging for gold, copper, and other things. They tend to find them in that ratio. So the scarcity is not reflected in the price. The destruction of silver, all gold that's been mined, is still around because it's an asset. It's in your gold spoons, it's in your jewelry, it's in everything. It's easily recyclable. The costs of silver has been below value. It's not even recycling anymore the gray silver that is in the TV screens and the devices, etc. That will have to change. They're going to need to bring it back in. Above ground stores, many people claiming there's a lot of loss. Don't forget, all this is happening after a hack saw the commitment of traders' reports get kind of lost, and who knows what happened, manipulated in what way. This is a rejection. The next move for gold, in my opinion, if we have gold run and then rest at 2,900, if it were to coincide with a visit to the 65 neckline and then a bounce by the gold-silver ratio again and a little bit of a slowing down in the metals, if that's the next rest point, you would have 3,000 gold and 65 ounces of silver to buy that gold. I will do the mathematics for you right here. Let's go 2905, 2905. I think the target will be surpassed. I think the technical level will come into play, but let's just have a look. Divide by 65. You already would be seeing at least $44, and that feels kind of moderate. It feels very early doors for me in silver. However, if you're 25, that's another $20 on right now. I think you could, by the time you make 305, you could have already fallen. At the rate that this has fallen, we've gone from 91 to 81 in literally 1 week. 1 week. We're only just started this week. It's Tuesday today. You've had Monday so far and part of the day of Tuesday. In 1 week, we have dropped from 91 highs. In fact, it was 92, it was 91.8 to your current levels, which is 81.2. So already 11 points dropped. Quite some rejection. Now look, you don't get straight line downs in anything. And there can be a bit of a bounce. We would expect a bounce on our basing ascending grind line in this megaphone structure, which is part of a macro right shoulder on a left shoulder here. But it could become very, very violent to the downside. So silver looking good. Where's silver projection if it were to get the same response as gold if we were to flag this? So we're going to stay on log scale. We're going to grab that. Okay, how far dare you go? Well, if this continuation were to go, isn't that interesting? What did I just calculate? $45. So silver to make 45 before the next rest. Rest, not end of bull run, rest. And I just calculated that to coincide with a bounce on the neckline of the head, which will probably see some churn and some delay and some frustration and some rallies and some pullback. So as a trader, if you're trading long, you could close on the run of the 45 level and you could hope to buy back lower down if you understand technical analysis. As an investor, I ain't selling any silver at $45. I'm not selling any gold at $2,905. But isn't that interesting that we've just done a technical exercise? And I've done this live, guys. I didn't know what the number was going to be. This is just testing, showing you how we go about it. Typically, you would get a reaction on the neckline. Gold-silver ratio down to the neckline, and then a reaction. That would be the reaction on gold making target 2905. So if we were to assume that silver would have a reaction 2 at wherever it is when gold is reacting and pulling back after running 2905, and we assume that point is coinciding with the neckline on the gold-silver ratio, it points to a $45 target. You saw the maths, you saw the thinking, and this is what we regularly do. $44.7 on the calculation and 45.75 on the projection. This is where you get technical analysis and scenario casting, the act of forward looking. And by the way, that isn't the end of the bull market. Don't sit, oh, Francis says silver's only going to $45 and that's it. No, you go up in legs that we have technical structures for. You go up in legs, then you rest. When the head and shoulder breaks to the downside, we will then see a gold and silver ratio, the next target, right the way down at sub 33. Yes, that number again, 32.8. So imagine how much gold will have gone up. We have no technical target for that because we haven't seen how it's got to 2905 and any new structure it's built in terms of geometric projections through patterns. So we have to wait and see what pattern it makes in running the 2905. It may run technically through the 3000 in a blow-off move and then collapse. That will lead to the neckline break on the downside here, and that's where we get these calculations from. And you can break it with momentum and then get a snapback rally before you end up setting up and spilling for the next move. So there you go. We have laid out in this video the guideline for where silver might top, our best guess, with technical pattern-based projections on the continuation target break, which is yet to happen on silver. It has happened on gold, in and around the $45 level, and on the basis that both metals are topping and pausing simultaneously, which is typical, and that will occur at the neckline, an assumption. Because we're talking about the future, it often happens, but it's an assumption, please understand, that you will likely be getting, on that basis, a 44.7, basically a $45 silver move. How do you think that's going to turn out for the likes of your precious metals miners, particularly those in silver, particularly those also in gold? I think it's going to be a great time for miners. Miners will start to come alive. This next leg up could start to see the move in the miners. You can click the link below and see our favorite miners, technically where we see the targets for them, which will be correlated and causated by the effects of these higher silver and gold patterns, as well as any technical structures we get from them. And of course, the fundamentals of how much more profitable they will be. These will be the real drivers of those technical structures. Click the link below, the very first link below. You will get a date, calendar, opening up, a small video saying hi and thank you for considering us. You can also visit the other aspects of the sites, including our macro calls on oil that saw its drop to single digits, which coincided with a gold long right now. And you will be able to book a call and become part of our community, get into these trades earlier, have a better understanding of HVF method, see all the different detail in our 4x25 structure of equities, gold, cash, and crypto for reset existence. What should be in those quartiles? How should you do it? How should you leverage trade it to add a little bit extra? How do you continue to stack real core metals, the right cryptos, cash, and even, I said cryptos, cash, metals, I'm missing one, and equities. There you go. Till next time, I'll catch you later. Thanks for watching. Bye for now.